High probability fair value gaps. Part 1. So I'm sure you are probably familiar with the 3-candle fair value gap formation as we see here. But how do we know whether this fair value gap should support price or not? Well, we need to look at the left side of the curve to get a better idea of what is occurring. As you can see, directly to the left of the fair value gap, there's also a SIBI or a bearish fair value gap. And when we see a SIBI and BISI overlapping like this, we can look at this area of price as a balanced price range. Using this logic, we should be looking at this swing low as a protected low, or in other words, we don't want to see price go back down there. And this gives us the confidence to enter long when price returns to the balanced price range and hold it to our buy side liquidity pool. So let's look at some examples. So if we're looking at this 1-minute chart on NASDAQ here, we can see that we have a sweep of buy side liquidity, a clear sell side liquidity pool to target, and we have this SIBI or bearish fair value gap that I want you to initially put your focus on. If we were to rely on the classic entry criteria for a silver bullet or a 2022 model, whatever you want to call it, we do require that buy side liquidity pool to be swept, and we do see that we do technically have a market structure shift here. But how can we get a better entry than that in this particular situation? And as I'm sure a lot of you guys have realized, sometimes if you're waiting for a market structure shift, you have a much lower fill that by extension you feel a little less confidence in. So how can we understand before we get this market structure shift, a breakthrough this swing low, how we can get a better, more confident entry in a deeper premium, which is what we want to get when we are bearish. So if we're looking at this SIBI here, directly to the left of it, there is this BISI overlapping. So with this BISI and this SIBI as we have here, in terms of anchoring my balanced price range, I will use the extreme low of the SIBI and the BISI and the extreme high of the SIBI and the BISI. In this case, you can see the high of the BISI and the SIBI are both the same. So I'm going to leave my anchor there for the BPR high. But as you can see here, the BPR low is right here, but the SIBI low is lower. So that is my anchor for the BPR. So after we close below that inversion here, okay, and have this displacement on this candle's close, we have both inefficiencies overlapping. So we can categorize this as a balanced price range, okay? And this gives us, as we mentioned in the first portion of this video, the confidence to take a short out of here before the market structure shift. And we should expect the market structure shift, okay? Let's move forward and go to our next example. Now we're looking at a long scenario. If we're looking at this BISI or bullish fair value gap down here, again on NASDAQ's 1-minute time frame, how do we have the confidence as price is retracing to trust a long here and not get nervous or fearful that this low is going to be taken? Same ideology. If we're looking at this BISI, right to the left of it, there is a SIBI right there. So we're internalizing this again as a balanced price range, or as you'll often see on my and everyone else's charts, a BPR. And that again gives us the confidence to expect price to bounce out of here in target premium objectives, in target buy side liquidity pools. Now, what makes this setup even better? We have an SMT, which is an extreme signature of strength when we have a situation like this, when NASDAQ is making this SMT and failing to make this lower low, and we have this cracking correlation. But on top of that, just the price signature, when is that SMT occurring? During a macro window. And in this specific situation, it is the 8:50 a.m. to 9:10 a.m. macro. So we're seeing an SMT that right after is followed by a balanced price range. So this is a very, very good scenario where you should feel confident taking a long out of, okay? Let's go to our last example. More of the same. If we are looking at this fractal of price, how do we know down here that price isn't just going to continue lower after we have this BISI formed, and that we are going to reach up for a premium objective, whether it's this inefficiency here or all the way up to this buy side liquidity pool, which of course you can see we did in fact reach for, okay? Same thinking as the previous two examples. We have this BISI after a liquidity sweep. But if we look right to the left of it, right, there is a SIBI overlapping. So there's been sell side delivery, buy side delivery. So this should be balanced. And when is that occurring? Right after a liquidity sweep. So this should give you the confidence to buy out of these fair value gaps when we can classify them as a balanced price range.